Well, it's Thursday, and that means it's weekly export sales day. And here to talk about it, we have Rich Nelson on the line of Allendale. He's a regular contributor here on RFDTV and Rural Radio. And he joins us right now. Weekly export sales did, in fact, come out a little bit ago here, Rich. Let's review what we had. Overall, it looked like the numbers were relatively weak. Now, on the corn, they were okay. We had 915,900 tons this past week. Soybeans, very disappointing on soybeans. We had a total of the current marketing year and next of only 335,100 tons. Now, that's because the current marketing year, we had 399,500, but then for the next marketing year, we actually had net sales reductions of 64,400 tons. So you had to take that back off of there again. The wheat came in there 437,400 tons this past week. Soy meal only 97,400. Soy oil 5,500. So what's going on here, Rich?
I think you've actually made a great point in saying that these were kind of mixed here today, and no doubt about it, maybe a little disappointing here for the soybean side. Of these sales for soybeans, China was responsible for only 143,000 tons, so no doubt about it, some concern right now, and still not improving this general export sales situation, which probably will be changed a little bit or adjusted by USDA here next month here.
Rich, call me a skeptic, but we've been talking here at length about the fact that these commodity funds have been holding either at or near record short positions in things like corn and wheat for quite some time. How are they positioned in the corn right now?
You know, as it stands here for the general numbers on the corn side, we have seen these guys move to near their record position as far as that net short. In terms of the current discussion point here, in fact, let me pull this up while we're talking. I do have them at minus 257,965,000. In fact, in this case, this would be a new record. What we find really interesting for our standpoint is the fact that they have this massive net short position. On the positive side, the price response is not that bad. We should be at $3 or below $3 based on this very heavy position they have right now.
I guess the thing that it just makes me think there's a rotten herring in there somewhere, because when you have the fact that a lot of rumors floating around that China might be interested in some corn, you have the very obvious stories out there about all the flooding in the Midwest and potential for planting delays, and it seems like it's a very real threat. Why would they be holding historically long short positions if there's that much at risk? Why aren't they more net neutral right now?
I think from their perspective, the outside fund trader perspective, and we do talk quite a bit with these people based on a lot of consultations we do with them, their perspective is that this is an anti-trade issue, and they feel that commodities as a whole, especially the farm commodities, are the ones which should be therefore be sold hard until we see some type of change on the China trade issues here.
All right. Well, with that in mind, we're going to pause for a quick little break, and then I will present Exhibit A on the other side of that discussion as we talk about livestock, and we'll talk about that when we come back. We're talking with Rich Nelson. He is with Allendale Incorporated in McHenry, Illinois. And we covered the grain export sales last week. I wanted to take a look at the livestock side here, too. Now, the grain overall had kind of relatively low numbers, especially in the soybeans. Now, on the beef and the pork this past week, the beef number came in at 18,600 tons this past week, which would be quite a bit lower than what we had the previous week. And the pork, remember last week we had the pork over 50,000 tons, and over half of that, or around half of that, was sold to China. Well, this week the total was 29,300 tons. Overall, a pretty good number, but way off of the pace from last week. Now, I do see where the key buyers that made up that amount would be Mexico. They were the biggest buyer at 15,500 tons. China only bought 3,000. This past week of that total of 29,000. Japan bought 2,300 and South Korea 1,700. Hong Kong 1,400. So just to follow up on our discussion of why the commodity funds are taking the positions they are, which is sometimes kind of a clouded picture here. Record short positions, you say, in the corn, but on the other hand, they had been pushing the pork trade down for month after month after month into new contract lows. And then here, gosh, it's just like there was just a sudden awakening all of a sudden about 3 weeks ago or 2.5 weeks ago where, oh my gosh, China might be interested in pork. We've been talking about it since last fall. And they ran it up from contract lows, which took them months to get there, to contract highs within a 3-week period. And now we're looking at limit up trade a couple of times here in the past week. So that was a case also where they were heavily net short in the market, and they acted like they got caught by surprise. I mean, what is going on here?
And that's actually a great discussion point here. So in this one, the funds are always, in most cases, a little net long here, and they rarely go net short. In this case, this is certainly a good whiplash effect. And actually, we have some good question about how long they are right now. As of last Tuesday, the 12th, they were only net short in this case by a little more than 3,000 contracts. Obviously, right now, they're going to be quite a bit different for current positions. I will point out, though, that they probably will consider today's numbers as far as pork export sales slightly disappointing, a lot lower than last week's China purchase. So on this one, maybe a little bit lower for today's open, but we'll see if we hit this market too hard. I don't imagine they will here.
Okay, what about the wholesale beef and the pork trade here the past couple of days? Do you see any indications of what that may hold for futures direction?
And for the most part, we're still seeing some very good interest and some higher prices still continuing here. So as it stands right now, we do have factual-based evidence, at least, that the cash markets are still on a small rocket ship, so to speak, here.
So the beef did back up just a little bit yesterday afternoon, and the carcass values on the pork down 9 cents, but the bellies, they gained back pretty much what they had lost in the earlier report by going up $3.10. They were at $134.91 yesterday afternoon. Well, the table is set. We're going to find out which way the market wants to go here this morning on the first full day of spring now. And Rich, thank you. Covered a lot of ground today. Very important stuff, and appreciate it very much. We'll catch you again tomorrow. Rich Nelson happens to be with Allendale in McHenry, Illinois. Janet, this could be an exciting trading day.
All right, I'll stay tuned. Thank you very much, Marlon.